All right, back to work. We're not done just yet. We got one more day left to make some more money on Friday morning. And by the way, how about that breakout pullback we talked about last night? That run up overnight, that deep breakout pullback. Mwah. Man, I wish every day was the day after FOMC did. That was a fun day to be a trader today. Hope you guys made a bunch of cash this morning as well. Now, we got quad witching tomorrow. All four asset class expire. These do tend to be a choppy, narrow range day. So in tonight's video, we'll talk about this one specific type of entry tactic I usually go to on these quad witching days, kind of lean on this choppy market. So we'll cover that tonight. Make sure you guys don't get chopped up and give back all those gains you guys made today. I also have some key levels for tomorrow. If we can get those key levels, we can load the boat, make some more money on Friday morning and finish up and have some fun over the weekend. So it's been a fantastic week so far this week. Charts are ready. Enough of the intro, right? Let's dive in, get those charts working, and finish up. It's been a really exciting, fantastic week here. S&P SPY, ready to go tonight. NASDAQ, triple Qs. They're always ready, aren't they? I've got 5 clues on these charts telling me where I think the money is made tomorrow. First clue, right here on the hourly time frame. I like to use the hourly chart as a directional filter. It's pretty obvious right now, we're bullish right now, but this one big clue right now, I mentioned earlier, we finished that pendulum swing we talked about in last night's video. We're way high up right now on the S&P. NASDAQ almost finished that pendulum swing, but I think the most important takeaway right now though is we know we're bullish, but we're really high up right now. So that's one big clue here. Context right now is we're in the nosebleed seats here on the S&P and the NASDAQ. That's one big clue here. Second clue on the calendar for tomorrow. Tomorrow is not your average Friday. We have all 4 asset classes expiring tomorrow, really basically at the closing bell tomorrow afternoon. If I had to visualize what quad witching looks like, it looks like this. A lot of really choppy price action back and forth in an overall kind of narrow trading range. Now, there's no guarantee we get that tomorrow, but I would say probably 3/4 of all quad witching the third Friday of every 3 months, right? March, June, September, December, right? Third Friday of September. So again, no guarantee for tomorrow, but this is what I'm kind of expecting tomorrow, that choppy, narrow stuff tomorrow. So hopefully I'm wrong. Quad witching for tomorrow, definitely a big clue here. Now let's drill down to some faster time frames because I use the hourly chart for overall direction, but the tick charts are really where the money is made because tick charts are based on volume, and for whatever reason they make the entry patterns a whole lot easier, at least in my opinion. That is a 7,000 tick chart, by the way, upper left hand corner, and that is the 21 EMA. It is the only indicator we need to make repeatable profits. 3 clues right now on this tick chart. One big clue, strong run going higher, get that separation off that moving average. Why is a strong move a big clue here? Because anytime we see a bull market overall, a strong run up, we know right now the buyers have one thing on their mind, that's to take out that high and maybe keep going higher. But oftentimes with quad witching, we might sink back down again, right? That's a big clue for me here tomorrow. The second clue in tick charts right now is that range right there. That range could go up into a range. Now, you guys and gals know this already, but in case you're watching for the first time right now, what do ranges do? They like to rotate. They rotate with symmetry, right? The amount above, the amount below. We use things like megaphones, expanding triangles. Ranges like to rotate. That's a big clue. And I would say this whole area probably is the chop zone for us tomorrow. So we're going to dive into that here in a lot of detail here in a moment. But look at the final clue right now. You know that prior range down there, right? Now, big clue here. That range right there. I mentioned earlier in the intro, we had that big breakout. We talked about this last night, right? Breakout leg, measuring leg, measured move, pull back, breakout, pullback. So the bottom line is that trading range, once we get that breakout pullback zone, it kind of finishes the life cycle of a trading range, right? So this range right here really doesn't matter that much anymore because they got their breakout pullback. This range under here, though, has not got their breakout pullback yet. And what do you see down there? Now, if you're a student of mine, you know this already. The prior week close. At the end of the week, the closing price of the prior week, it acts like a psychological magnet. You'll notice it's the only indicator level I have on my chart. I don't care about the prior week open. I don't care about the prior week high, the prior week lows. All I care about is that prior week close, because just you watch, towards the end of the week, markets, they seem to find a way back to it. This range is a breakout pullback zone. This range is a magnet, right? So one of the levels I would hope for tomorrow, if the quad witching gods are shining down, we'll get a nice strong run down there. We'll talk about buying that. I've got 3 ways to time the entry on that. Let's talk about the chop zone, because the chop zone is, I think, the most important clue for us here right now. We know that ranges like to rotate. When I think about quad witching and I think about the chop zone here, there really is one basic technique we look for, and that is technical traps. So as we go higher, I'm waiting for what are basically technical traps, right? In price action, they call these technical traps. Lower low in price, above that high, running lower, bears try once, go higher, bears try twice, getting in below those lows. Now, we are bullish overall right now, so I tend to go full size positions on the technical bear traps off the low, half size trades on the ones above. That's my personal opinion. You can make a decision for your own trading. And by the way, later on in this video, I want to talk about if we go higher here, because we may keep grinding higher. Fridays do have a tendency to kind of grind in one direction. We'll cover that a bit later on the NASDAQ, because the NASDAQ, I think, has some more space to go because they haven't reached their pendulum swing overall. So guys, very simple game plan for tomorrow. As you run higher, remember, we're not going to pick tops and bottoms. We're not going to blindly sell off that high, right? Let them pull back, let them try twice, and we're looking for, if you're in my free video classes right now, it's a technical bull trap. It's a lower low in price, above the high, run back down again. And remember, the money is made around the edges of ranges, okay? The edges of ranges. So the edge up here, right? The edge down here. If I had to guess right now, I would guess the best trades are just above the edge right there, just below the edge right there. And again, bull trap, bear trap, trade that rotation back and forth. Now, if we're really lucky tomorrow, something will happen. Trump will say something, you know what I mean, right? Something will go on overnight here, and we'll see a nice, strong run down. And remember, if I'm trading inside a range like this, I really can't get a very good risk-reward ratio. I gotta be careful in that area. But if we make a strong run down though, now I can risk small to earn large. I can be a lot more aggressive on those types of trades. Now, I don't mean blindly buying it, of course. What I'd love to do is run this sucker lower, get that 21 EMA coming down here, and get what is basically called a 2-try bear trap, right? Not a technical bear trap. And we pull back, bears once, bears twice. Think about now where their stops are, and I can now use those seller stop losses to squeeze that run, going right back up where? Back up into that range, because ranges act like magnets. And remember, if there's one thing I teach you in these videos, when you got your bears getting squeezed like that, look for that separation off that moving average and add to your winner. Once you start getting the confidence to add to your winner, bear trap, add-on, and again, the add-on is it separates off the moving average, higher high in price, a technical bear trap like I teach in the free video course. Now I have a couple more entries we'll talk about here. Before we do that though, let's slow down for 2 seconds, because I know most of you guys and gals watching right now, you guys know these patterns already. You guys are making bank off these already. But if you're watching for the first time right now, this might be a brand new strategy. What is this guy talking about? Traps, add-ons, chop zone. Don't you worry though, I teach this entire system, all the entry tactics I'm talking about. I teach this in so much more detail in my free video classes. In fact, I'll put a link up top here for you, upper right-hand corner, because you want to take that free video course. Hit that link that popped up there. Watch that free video series, because the strategy I teach in that short video course will teach you a simple trick we use in our members trade room that literally tells us exactly where the best entries are going to be each day. More importantly though, let's face it, we make our money by timing good entries, right? That's where the money is made. So in that video class, I'm going to teach you my 4 favorite entry tactics, entry setups, so you can time better entries, get your confidence back, get your P&L back in the green. Guys, bottom line, if you're still missing the best entries, these markets are way too good right now not to be banking profit. So hit that link that popped up there. Watch that free trading course. Everyone loves all the trade examples I share each day in that short video series. Best part is it's completely free for you. Also be aware too, guys, I'm going to put all the links you'll need below this video if you want to learn more. So start first on that free video course. Most folks start making money all on their own, all from that free video class. That link is below. We trade together, don't forget too. We get together every morning and trade together, 8 o'clock Eastern time. You'll love the trade room. I'll put that link below as well. And by the way, if you're on Twitter or the X platform during the day, I post a lot of charts and videos and mindset stuff on Twitter X on the platform there. So give me a follow. All the details are linked up below the tonight's description of that YouTube video. I just want to make sure I take a pit stop there and share with you all if you're watching here for the first time, because a lot of this stuff is new for a lot of people that come here and find these YouTube videos. Okay, where do we leave off right now? Okay, we talked about the chop zone, right? That one type of entry pattern we look for on the chop. I will talk about going higher here because, again, the NASDAQ has potential to really drag this market higher. We'll talk about why I say that in a moment. I mentioned earlier, though, run down, bear trap, and back up again. Remember, though, let's face it. Sometimes we don't get that bear trap. A lot of times we don't get the bear trap. Sometimes, because remember, everyone wants to buy this breakout. Everyone wants to buy the prior week close here. There's a decent chance tomorrow here we may run down and just whoop and run right back up again, right? We don't get that bear trap down there. Remember this, guys. If it V bottoms off the low, then what you do not want to do is chase after it. Okay, we know that already, but it's easier said than done, right? Sometimes our fingers just can't resist the temptation. In my experience, having a game plan is the key to not chasing after the moves, right? We plan our trades and we then trade our plan, right? That way we don't get caught off guard and go pushing buttons when we shouldn't be. So the hardest part about a V bottom is, and maybe I'm the only one that does this, right? But that voice in my head is always saying, come on, man, you're missing it, right? The FOMO is real on those V bottoms because you want to buy down here. Okay, your patience is rewarded, though, if you wait for the first test off low this channel. So market trend line off the highs, bring it down off that low. Remember, not required, but the best entries are always going to be below a prior swing, and we call this first test is the best test in our trade room. Now, I can't go over all the entry tactics in this video, but again, that free video course will walk you through bear traps, failure patterns, pullback combinations, strength moves. Again, if that terminology is brand new to you, you'll learn more about that in that free video course. But that will be a backup entry if it bounces hard up off of that low. And then one last thing too, look back at this area right here. What happened right there? That was a range breakout. What happened? It was the breakout leg, the measuring leg, then it pulled back. Okay, we talk about this a lot in these videos, but in case you haven't heard it before, okay, why is it important? Well, because what if we ran up? We bull trap up here, we run lower, and all of a sudden we get this huge run down here, okay? This will feel very scary, it will. But I want you to remember, whenever we break out of a trading range, and I'm telling you right now, this will change the way you look at markets for the rest of your career. Once you learn this little trick, once you learn the breakout leg, measured leg, it's like everything begins to make sense. The markets don't seem so weird anymore. It's like everything starts to make sense. Okay, so now we breakout leg, measuring leg. All right, that's our spot, right? That's our spot right there. That's the money zone, as we call it in these videos. The reason I say this is because oftentimes what happens is when I see a big move, a big measured move going lower, that's a lot of strength going lower. And like I said earlier, when it's very strong, we expect a retest, right? Okay, so oftentimes what happens is we'll get that breakout, that measured leg. We oftentimes will nail that bear trap, right? Bears once, bears twice, get that bear trap. And what I do is I go in for a one-to-one, right? So stop, target, one-to-one, move that stop up to point of entry. A ton of examples of that, by the way, in our free video course on the website. The bottom line is these are winning trades, right? But what happens oftentimes is the underbelly of this range, right? Remember, breakout pullback, right? Underbelly of the range, above these highs here, and then get a retest of that low. All right, now, I'm going to warn you right now, this will feel very scary. It will feel very scary. But remember, this is the tick chart, okay? Remember, guys, direction is on the hourly time frame. It's not in the tick chart, okay? This is one of the most important, it's one of the important mindset hacks. All right, we don't let fear run our trading. And I say that because fear will kick in, right? You'll second guess this trade a lot. But remember, JJ says the direction is on the higher time frame. This is not enough to cause a reversal on the higher time frame. It may be a reversal on the faster time frame. Remember, it's a retest trade. It's a retest trade. Anybody who sells up here, where's their profit target? What do you think? If you sold that bounce, where would you put your profit target? At the lows, right? At the lows, at least most people would. So what I always think is sellers up here, they take their profit where? They take their profit down here. What do you do when you take profit? You buy your way out, right? So sellers up here become buyers down here. Now tell me, what do you think? Is this a good place to sell, right? Of course not, right? We're bullish overall on the hourly. Now, again, that voice in your head will be kicking and screaming saying there's no way I want to buy. It's so bearish right now. The news media will say this time it's different. It's not different this time. All right. It's not different this time, right? We're overall bullish on the hourly. This is a great spot for a bear trap, right? Because all the rookies will get fooled into this. We call these retest trades with us in the morning trade room. Retest trade. Really anywhere at that low or below, right? Anywhere below that low right there. Trap those bears in and squeeze those stops. These retest trades are oftentimes our biggest winners because they've got everybody trapped in. Everybody's trapped in. And we know where that low now is, so it makes it easier now to structure the entry, right? Again, 2-try bear trap, out of that winner, and let that trade run. All right, guys, some variations here of that. Again, if we're lucky, we'll take out that prior week close and right back up again. We'll see. But again, be prepared for that chop zone. Now, one very big question right now is, what if we keep going higher here? Again, like I said earlier, there's no guarantee we get chopped up tomorrow. This may keep grinding and running higher here. Let's go grab the NASDAQ right now because, like I said earlier, the NASDAQ, now keep in mind, these pendulum swings, they may seem perfect most of the time, but they're not perfect, right? This may be close enough. But it looks to me like this NASDAQ, I mean, you can see it for yourself, right? It doesn't look like we've completed that pendulum swing yet. Now, again, close is oftentimes close enough, right? It's kind of like horseshoes and hand grenades, right? Close is kind of close enough when it comes to these pendulum swings. So we might be done here on the NASDAQ, but I wouldn't be surprised at all if we had a little bit more juice left to it, take out that, 33 and a half up there. Anyways, we know we're bullish right now. That's pretty obvious. But again, when we're rotating off that low, and we talk about in our trade room, there's direction and there's context. These are two different things. We can be very bullish, but be very low. I can be very bullish overall, but be very low, right? On that one, I am bullish overall, but the context is I'm buying low. There's direction and there's context, okay? That's very important because context tells you what type of entry patterns are more better right now. Right now, the direction's easy. We're bullish. What's my context? We're way high up, right? We're in the nosebleed seats. We're in the Dramamine seats right now. We're way high up. Okay, so that's the definition there of direction and context. Now, I'm going to dive into the tick charts here. Before we do that, though, if you're enjoying these videos right now, please help me grow this channel, will ya? By hitting that like button, subscribe to our channel, hit that notification bell, share these links for the videos with our trading buddies here. I put a lot of effort into these videos every evening. I appreciate you guys supporting this YouTube channel. Thank you guys for the likes, the subs, all the shares, all the ongoing support, and all the haters in the comments. I love you too. All right, dive into the tick charts here now. On the tick charts here right now, a couple big clues here right now. So bullish range, of course, first, right? Bullish range here. We pop up into that range. Now, remember, what do ranges do? They like to rotate, right? So the NASDAQ may have some good rotation here in the overnight for tomorrow. And remember, because we're overall bullish right now, there's always that potential where it just slingshots off of that low and breaks out running higher. We'll talk about why that's important here in a moment. Now, On the S&P, we had that prior range and that prior week close. Look at these levels below the range right now, right? That is a gorgeous level right there. That we'll call it 24,600 on the NASDAQ. And my goodness, right? Again, if the trading gods are watching down on us for tomorrow in quad witching year, please, 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 please give me that breakout pullback. As we saw this week, markets hunt for these prior zones, right? They hunt for ways to take out these ranges. So it may not be tomorrow, but promise me next Monday when we have, I don't do videos on Friday nights, right? So next Monday, don't forget that breakout pullback zone down there. If you don't get it tomorrow, it's almost a guarantee at some point next week we will get back to the area there. So keep it on your radar for tomorrow here. Now, we mentioned earlier, how do we trade chop, right? How do we trade the chop here? We trade chop. What's the pattern again? As we go higher, we're looking for what pattern? Yes, we want to get the higher high in price. Below that low, that's our chop pattern, right? Very important. Do not fall victim to chop here. We go higher, we run higher, we complete the pendulum swing. Top of that triangle here, what's our chop pattern? Buyers once, lower low, buyers twice. Now, these may come in different shapes and sizes, all right? Lots of variations of these chop patterns. For example, we may see something like this where it begins to kind of grind up, and we find one of those channels and we get in underneath a prior swing. The most important thing is that as we're trading inside the chop zone right now, our number one goal is what? Get in above prior swings. I would rather miss a trade tomorrow, right, than break this rule, right? It's okay if you miss some trades. It's better at this point here, protect that capital. Friday, protect capital first, make money second, okay? Friday mindset, protect capital first. It's so much better. I enjoy my weekend so much better when I finish the week strong. I would rather have a 0 day on Friday than a red day on Friday, right? Build that momentum going back on Monday, getting in above the highs here, right? Those some variations of those chop zones. And again, if we get lucky and get that run going lower, bam, now I can get those bear traps. Now I've got a chance to risk small, earn large. Now I've got space to run to add to my winners, right? Okay, makes sense. Same thing again, right? It's that bear trap, that add-on, and that same technique where, again, if this thing rips and runs lower, pulls back, right? You know how to find that measured move, and then, man, oh man, that would be fantastic, right? Bear trap down there and back up. And again, run down, retest, buy the retest, right? Buy the retest. Strong run down, V bottom off that low. That voice says, chase it, chase it. Tell that voice to shut up and quiet down back there. And you keep working that plan. Rinse and repeat. You'll learn to love that pattern right there. Okay, how do we trade this now if we go higher here? All right, going higher. We already know the trade going long, going higher. We already know that already, right? The trade going long, going higher is that chop zone trade. Now, the rotation, below the low, above the high. This is very important because if I run up to those highs right now and the moving average comes over and we start struggling, okay, you know what's happening. It's trying to rotate back down again. However, if we pop up here, this is very important, pay attention. If we pop up here and we start separating away from that moving average, we break through that pendulum swing, the separation, right? The convincing break, not by a couple ticks, right? The convincing break through that pendulum swing. Get above that triangle high, right? Okay, now we're talking. Now we have a breakout. Couple things, right? First of all, that range now, breakout, pull back, get that moving average pulling back. Bears try once, twice. Remember, higher high, right? Higher high, and back up to retest the high. Classic breakout pullback, classic breakout pullback. Also, right, we know that pop and grind, right? Find that channel off that high. Bring it down around that low. What do we always say? First test is the best test. Don't blindly buy it, right? Don't waste your time on divergence or reading tape. You can try if you want to, but I've never actually met anybody who makes money with divergence and reading tape personally. But bear traps, hell yeah, right? Hell yeah. Because bear traps, they trap people in, right? Remember, if you're caught short, what happens? You get stopped out. You buy your way out. Buyers are entering the market right there. Sellers become buyers as you're in the market right there. Now remember, if it grinds like this, the breakout leg is the measuring leg, okay? It's a small adjustment, right? Breakout leg, measuring leg. There's your target on a Friday late morning, on a Friday afternoon. And the easiest one is we get some run overnight. We go into a range overnight. I say easiest because these are very easy if you want to know how to trade ranges, right? Find that prior range. We call these stacked ranges, right? We saw one of these today on the S&P. The previous range is the breakout pullback. The current range wants to what? It wants to rotate. We bear trap off that prior range. We add more as it rotates. Remember, as it rotates, always buying below that low. Leave that runner for that pendulum swing going higher there. All right. One last thing. Do not be surprised here. We go up into a range. We try to go higher. But again, remember context, right? We're way high up right now. We try to go higher. And all of a sudden, right, we get that bull trap pattern like I talked about earlier. Again, this would be a half size for me. You could choose your sizing if you want. And we run back down again. Be very careful buying above a range. Remember, context. We're already way high up right now, right? This would be a nice little bull trap trade off that high, but the big money is made above the high, off the low. Find that swing, right? Find that support level, trap those bears in, and whoop, right back up again. Trade that rotation back and forth. There's a lot of examples of these inside the free video class. I could keep on doing this all even with you guys here, but take that free course, dive into that on the website. I have like hundreds of examples of these on the website. You guys can drill those over and over again this weekend. All right, guys, that's the game plan for tomorrow. Don't be getting chopped up tomorrow. You guys have the game plan now. We'll see if we get that nice deep pullback and hopefully make some real money on Friday morning. Now, speaking of Friday morning, right? The best place to be in our trade room, 8 o'clock Eastern time, guys. No easier way to do this than trade along with us every morning. Start first with that link below the video tonight, description of the video. You're going to love the free video course. You'll love the trade examples, but then promise me, once you get rolling with it, come trade with us in the morning room. We'll do it together, a bunch of fun trading together. You're going to love the morning room at 8 o'clock Eastern time. In the meantime, fantastic job this week. Make a killing for me on Quad Witching Friday. Enjoy your weekend too. We'll see you guys tomorrow morning in the morning trade room. Be well, be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.